watching this live. Okay, let's flip this over. Let's get the YouTube going, get you guys the links, and get you guys going. Here's first link. Second link. There we go. All right. Let's see who's on this morning. Let me share my screen. That usually helps. Not fun when I'm not sharing my screen. All right. Perfect. Brian, good morning to you. Timothy, good morning. Dave, good morning. Cam, happy Monday. Robert, Carlos, David. And folks, for everybody here who is just coming in, just FYI, we have a couple of things to talk about. First of all, here are my links. If you guys are ready for my pit, it's ready for you. Hey, PJ, how are you? Good to see you. Happy Monday. Douglas, how are you? Good morning. Good morning. Good morning. And by the way, folks, just so you know, if you need customer service, Cam, who's on this call, and his team have started a Zoom room, which you can access from any of your members area. There's a big red button there, and they're on from 10 a.m. to 1 p.m. Eastern time every single day, Monday through Friday, answering questions like, how do you install the Pro Trader dashboard? What is Roger doing here? Blah, 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 blah. All that stuff, all that good stuff, it's there. So instead of sending me an email saying, Roger, how do I do this? Go to your members area and hit the red button, and Cam and his associates will answer, which I don't know who came up with that idea, Cam, but that's like the best idea I've heard in a very long time. So I'm going to give you full credit for that one. Flying Ronan is in the house. Roddy's in the house. Elizabeth, Jack, Mark, Barley, Gary, R, Douglas, Prom, awesome. And if I did not, Henry's in the house. Let me just write good morning to everyone. Woo, look at that. We got 94 people here within 2 minutes. I like that. All right, so let's start off. It's been a last week was just a crazy week. The market is extremely fragmented right now. I actually do feel in good faith like we are being squeezed higher right now, and it doesn't feel natural, and I don't like it. And why do I feel this way about it? Let me tell you why. Hey, Carrie, how are you? Let me tell you. Yes, what Cam just wrote. See what Cam just wrote? Join us CS Live Monday through Friday, 10 a.m. through 1 p.m. All your questions answered. It's the best place to be. It's like being with me live, but better because Cam and his associates, they know exactly what's going on with all the customer service stuff where I'm clueless. I'm too focused on this. All right, so let's talk a little bit about the market. I want to show you guys something. The last 5 days in the S&P 500. Look at this trading action. Very listless. Then it has a little bit of a rally at the end of the day. We gap up and we're very listless. The trading range after the market has been opening up has not been it has zero rhythm. The market has no rhythm. It usually does this, up and down. It's just been choppy. I mean, this is just very, very listless. So to me, this looks like a market that's looking for direction. I don't like what I'm seeing right now in the market. I don't feel like the move right now is very natural. I feel it's extremely fragmented. And I showed you guys last week, I showed you on my sector scan, we've been going every 5 days. We've been going between blue chips and tech, blue chips and tech, blue chips and tech, speculative blue chips, speculative blue chips, speculative and blue chips. Well, it's completely mixed up right now. I mean, it's like somebody took a bag of all the sectors and decided to play it's like somebody took it and just mixed them all up like this. Let me show you. Semiconductors, okay? Let me just go through this with you so you could see how bad it is. Semiconductors and basic materials and consumer staples and healthcare. Okay, well, basic materials, consumer staples, and healthcare, they do go together. They do. But semiconductors does not belong in this group. Okay, well, what about healthcare? Healthcare belongs here. What about home builders? Home builders and semiconductors are speculative. They're not defensive. basic materials, consumers, especially consumer staples and healthcare, these are super, super defensive sectors. Semiconductors are not. Okay, well, let's continue. So, all right, you got semiconductors on top. So where's QQQ? QQQ's got to be real close to it, right? Oh, it's all the way down here. Well, wait a minute. How can tech be down here and technology be? And folks, you don't need to be a market wizard to figure this out. This is just basic common sense. How can technology and QQQ be down here and semiconductors being up here? It's like taking your bathing suit to a holiday in New York Christmas. You don't do that, right? It doesn't belong here. It belongs down here. It belongs in Puerto Rico in the summer or Miami, right? Not in Alaska or New York or Washington D. It's in a different zone, zip code. So you could tell, you could really tell. Or how about energy being all the way down here? It just doesn't make any sense. Utilities are in the middle. Small caps are down here. Home builders are up here. These are both small caps and home builders thrive in a low interest rate environment. So how come home builders are up here and Russell? It's completely mixed up. And one of the things that I've learned over the last I don't know 20 plus years is that when markets go up, 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 and get stretched out till the tilt, they get out of whacked. And then when they come down, they get really well balanced. And I'm going to tell you something. This is the most out of balance I've seen the market maybe in 6 to 9 months. Morning, Thomas. So yeah, it's this is not normal. This is not typical. This is not what you would expect. So whenever I see a market like this, I mean, just look at this. You got QQQ. How can QQQ be down here and semiconductors be up here? It makes absolutely no sense. Semiconductors are tech stocks last time I checked. And guess what? They're in all the stuff you guys use, right? So it's a big issue. And what about mid caps? Why are mid caps? I mean, this is very, very fragmented, very fragmented. Now, over the last 3 weeks, same thing, exactly the same thing. How about over the last 6 weeks? Let's see. No, over the last 6 weeks, it's a lot better. Over the last 6 weeks, tech is still leading. But look, consumer discretionary is down here. But most, like for example, technology's up here. See, this doesn't look as fragmented. You got QQQ, technology, communication, semiconductor. See that? Hey, Rochelle. I hope your husband is letting you trade now. That's what my concern is. But anyhow, blue chips down here. But look at it now. I mean, this is crazy. So whenever you see a market like this, you could tell that it's not trading on its own volition. It's kind of like, it's like you guys, it's like being functional when you're burnt out. You're functional at a very low rate, which is one of the reasons why the market on an intraday basis is very, very listless and doesn't have volatility. It's looking for directional bias. And in order for a market to find directional bias, it must have a catalyst. So let's talk about the catalysts that are on our agenda. Earnings. You still have earnings. You don't have large earnings, but you do have a lot of retail earnings, and retail is really rallying right now. Matter of fact, here, show you. XRT. Look at retail right now. Retail is looking so far. Now, remember, everything is near all-time high, so it's kind of hard to gauge. But retail is looking pretty good. This is the daily. It's making a swing high, and it has been consolidating. So retail has been looking pretty good in light of earnings. Also, let me go ahead and give you guys this. Here, I'm going to post the link right here. Darren, Paro, good morning. Good morning. Good morning. Here's a link so you guys can have this. This is the this is all. Make sure you can open it. Let me know if you can open it. But you should be able to open it, and that's all the major earnings and their expectations for this week's. I didn't bother giving you the all of them. It's not necessary. This is the big ones, the ones that matter. And you could see you've got ZM, you got FI, you got DPZ, Workday, Lee. You've got a lot of earnings. eBay tomorrow, Low tomorrow, Baidu on Wednesday, CRM. So this is Dr. Serena. Good morning. Thank you for joining us. So you could see right here that there's a lot of earnings that are still have not been digested. That's the first thing we have to deal with this week. What about the second thing we have to deal with this week? Well, let's take a look. Moondog is in the house. That's it. We could finally start, folks. Moondog is in the house. So let's look at what do we have in store. Today we have new home sales at 10, which means we don't do anything before 10 a.m. We got Dallas Fed Manufacturing Survey 10:30. It could have an impact on interest rates. You've got durable goods. You've got consumer confidence tomorrow. Consumer confidence is a very important report. Thank you, Adam. And durable goods. Tomorrow. Wednesday, you've got GDP, which means tomorrow we could see a little bit of a muted price action. And then you have a whole bunch of Fed speakers. I don't think the GDP will have as much of an impact because the Fed has pretty much given us their trajectory. You have on Thursday, Chicago PMI personal income on Thursday, not Friday. I don't know why it's on Thursday and not Friday. This is a very big report. It usually happens on Friday. I got to look into it. Does anybody know why it's on Thursday, not Friday? Morning, Jack. And then Friday, we've got ISM manufacturing, construction spending, consumer sentiment, which should be right here. Or next to consumer confidence. Why they do that, I have no idea. They probably do it just to piss me off, but they've been doing it for 20 years. I don't know why they put consumer sentiment up here. It's a very important report, but they put it in the end of the week. I don't know why. And they're not going to change it because of me. I don't think the Fed speakers this week are going to have a lot of momentum because of the 60-minute interview with Powell, who pretty much said what everybody is thinking right now. Let's now talk a little bit about global economy, and then I'll get into technicals, okay? We've got a lot of talk about technicals today. If you're seeing a blurry screen, go to this tab right here and go to quality and hit 1080p HD. You see the gearbox on the bottom. The gearbox you can take it all the way from 144 to 1080p, a digital 1080p. You could switch it to 1080p. It's this where my mouse is. It's that little gearbox. Go to your gearbox and switch it to 1080p, and it'll be crystal clear. I broadcast this in 1080p, and if you watch it back, you should be able to see it in 1080p, and it's crystal clear. Tell me it ain't so. All right, let's continue. So we got GDP this week, their favorite inflation gauge. Yeah, go to settings. Just go to settings, the gearbox. John Williams said Friday the U.S. economy is headed in the right direction. I agree. Suggested that it would probably be suitable to reduce interest rates later this year. I completely agree. He's not saying anything odd. Why would it change? I don't know, because it does sometimes. I don't know why it would change. Ask YouTube. I have no idea. But you could change and see if it says 1080p. If it says 1080p, then you're on the right track. We now have a 2.5% chance of a 25 basis point rate hike and only a 20% chance of it happening in May. I believe it actually may have about a 30% chance of happening in May. And now I think we're going too low, but that's okay. I'd rather go too low than too high. You've got earnings on CRM, big consumer stock. Snowflake, big consumer stock. Zoom Communication, big consumer stock. Hewlett-Packard, Dell, Lowe's, TJ Maxx, Macy's, Best Buy. Those are all scheduled this week, okay? And those will make a huge difference to the bottom line, so be careful. And we have actually Roku in the trading pit. That's also consumer stock. U.S. personal consumption expenditures index is going to be up this week. That's going to be a very big report. You got you got new home sales coming out today. You got U.S. building permits. Existing home sales and building permits were okay last time, even with rates going higher. Now remember, it's holidays right now. So not holidays. What am I saying? It's not holidays right now. It's beginning of the year, and beginning of the year. What I was trying to say was during the holidays, the Christmas holidays, home sales usually go down and they pick up around March, April. So right now, I wouldn't be surprised if they were a little bit of subdued because most people who buy homes do it in the spring before the new school semester starts, so they can get their new address and phone number for the new school for kids. So you see a big spike in home sales and building permits towards the second half of the year, but the new home sales and permits were very strong. Europe is down 0.20. Nothing really crazy going on over there. Nothing that we really need to pay attention to. China closed lower, snapping a 9-session winning streak. Going to give us a little wind in our face. China took center stage after 11 companies lost their credit ratings on Friday as Moody's Investor Services. That's very bad. Very, very bad. Nikkei closed higher today, hit a record high. Don't say I didn't warn you. I told you guys you should start investing in Japan. They have been looking fantastic. And earnings and updates and downgrades, nothing really crazy we need to worry about, except Berkshire Hathaway. They're up 5%. Excuse me, up 5%. They have an increase of earnings. The stock is very expensive. If you guys are interested in Berkshire Hathaway, it's probably better to just buy warrants instead of the underlying or options. Now, let's talk a little bit about the stock market. The bond market decided to rally on Friday. Again, makes absolutely no sense whatsoever, but the bond market rallied Friday. It's, again, in this range, and I think it's going to stay in this range for a while. It couldn't break down, which is a good sign for the market. It's actually positive for the market. And it's telling us that interest rates are actually stabilizing a little bit after making a 7-year high. Yes, I said it, a 7-year high. If you look at momentum levels, which I will share with you right now, you will see still that as of right now, as of today, and folks, if you're going to listen to anything I'm saying, please listen to this. In the entire stock market, any stock priced over $2, only 51% of stocks are trading above the 50-day moving average. So if you were to look at the stock market, and I'll 50%, 50%, all right? And if you look at the stock market, you will see here that even on the S&P, it's only 66%. It's not that high. So the markets are not as strong as they appear to be. Look at Russell 2000. That's a huge red flag. 44% of stocks are trading above the 50-day moving average. 54 above the 200 days. So small caps are not looking all that great. So even the Dow, you don't have 80 or 90%. You only have 70% of stocks. And on the NASDAQ, you have 64% of stocks. On the NASDAQ composite, on the entire NASDAQ, 52%. 52%. So if you were to look at the broad market right now, you know, I know everybody's thinking, wow, markets are making new highs every day. Markets are making new highs every day. The truth of the matter is a few stocks are making swing highs every day. And the broad market is a lot more here than right here. And I've been saying that, and it hasn't, momentum levels have not been going any higher. And volume, again, has been coming lower, not higher, ever since right here, which tells me that there's a really good chance when we do pull back, we're going to pull back to this area right here, which happens to be right at the 50-day moving average. Now, I hate to say I told you so, but I'm going to tell you right now, I'm going to make a prediction. This market, before making a lot more higher highs, is going to hit the 50-day moving average and then possibly go higher. This market is overdone, and this microphone thing that's coming out, this extended, it usually doesn't end well, especially when volume consistently has been going lower since that upper area started. So I'm not as bullish. Another major factor is the number of stocks. The number of stocks breaking out, again, 400 to 14. Now, if this was 400 and this was 100, it wouldn't be as bad. But when this gets to 400 and this gets to 14, and you have 44% of stocks in the small caps breaking out, and their earnings are coming up right now. This is the Russell 2000 earnings. A lot of those stocks are mid-cap stocks. They're in the Russell 2000. It can be a major, 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 major issue. All right, so let's now talk about stocks that are on my hit list and on my downside list. Let's see what the S&P is doing this morning so far. So far, just kind of nothing. Let's see what indices are doing. Nothing. So just real quick, we're holding a couple of stocks in the trading pit. We're holding Roku short. I want to give them to you because we're in play right now. We're just to give you some ideas. It's turning a little bit higher right now. My stop loss would probably be right here around the 68-ish level when it starts filling this gap. So we have quite a lot more space to go. The one that I'm getting concerned about, and the other one, the only one that really is moving against us, like a nasty move against us, is EQT. And I just want to explain to you what's going on there. It's mostly a natural gas play. If you look at natural gas, if you look at natural gas right here, natural gas is up a bit this morning. But the reason it's up is actually because sinks as warm temperature. Look at Friday. Natural gas sinks as warm winter weather temps engulfing in U.S. So what I was expecting with natural gas, I just want to show you this because I haven't done it yet. I was expecting natural gas to just keep coming down like this. And as long as it stays below this level, I'm going to stay short because I think it's going to come right back down to this base. But that's the reason why I'm short those stocks. Yeah, the Widowmaker, exactly. Now, let's talk about stocks that I'm really liking right now to the long side and short side. First of all, three sectors that I like. I like healthcare. You're going to have to write this down or watch the replay. XLV, XLI, been liking these, and XBI. Yeah, what are they saying, Adam? What are they saying about natural gas? Biotech, I like those three. And retail, I told you about retail. XRI. Oops. XH. What's retail? I just had it a minute ago. Retail. Here it is. XRT. That's it. I don't know how I remember all this stuff, but I do. But those are the ones that I like. Those are the three sectors that I like. Now, let's talk about stocks that I like. EFX. BA. I like this one. That one looks good. WTW. Notice no high flyers, no NVIDIAs, nothing like that. No monkey business stocks. Looks okay. It doesn't look great. Looks okay. Uh, Garmin looks like it can definitely go a little higher. BYON looks pretty good. Looks like it. Look at volume. It's starting to gear up here. Wouldn't want to be short that stock. ECL looks really good. Uh, Moss looks really good. Two more. SCI. Talking long-term rebound up, but now 12-month supply can't give it away. Right, exactly. Exactly. That's Service Corp. And the last one was DVA. A lot of new stocks for you guys today to the upside. All right. Those are the stocks that I like to the upside. Now let me give you the stocks that I like to the downside. EXAS. Nasty stock. Wouldn't want to buy that stock. DBC. This is the commodity complex, by the way, guys. This is the index that tracks commodities. So this means you got to start paying attention to commodities. Commodities are breaking down. The DB Commodity Index Fund, pay attention because it's not ready yet. But if it goes down, say right here, it will be ready. So I'm giving it to you right now, DBC. And they tend to trend pretty well. IRDM. Definitely a stock to look at. AMN. Definitely a stock to look at. And last but not least, CNMD. Now, before I let you guys go on your way. Now, look, I've spent the better half of 2023 developing what might be the most advanced tool that exists for retail traders. I know Brian here spent a bunch of time helping me code it too. It's about 3,000 lines of code that tracks institutional buying in real time, giving us real-time signals that actually matter. All we've got to do is ride the coattails of massive orders, and we can target endless opportunities without leaving money exposed to the markets. And in case you didn't know, that's exactly how over 500, let's see here, 594 people feel about nailing a 95% win rate on over 119 trades. I think over 120 now. Can't promise future results. I wouldn't do that. Good news for you is that the very next trade drops today. Click on the link below and check it out. It'll be very, very cool. I'm looking forward to spending my lunch with you guys at the VIP room. I posted the link for everything you need. If you have any questions that I did not answer, now, if you have customer service questions, please, please, please reach out in your members area to Cam. But if you have trading related questions, like a trading question, I'm the guy to ask. Ask me trading questions, all right? And I will respond. I responded to Adam at it's like 6:30 this morning, I think. Hopefully Adam got my message. I like to communicate with you. I have an open door policy. I find that communicating with you, I get to learn a lot about you, and you guys get to learn more about the markets. So it works out really well. I hope everybody has a fantastic day today. If there's anything I'm not doing that I should be doing here, please email me and let me know. Have a great day, everybody. Bye. Bye, Cam. Bye, guys. Bye, PJ. Bye, Adam. Bye, Bradley. Barley, Tony, R. Bye, Jack. Bye, everyone. Take care, guys. Have a great day. Yeah, I think NVIDIA is also overpriced, and I don't like how it's been behaving lately. But I'll see you guys soon. Bye, everyone.